All right, Module 5, we learned about taxes, and we are going to move right along, so we've already hit the hour point. Okay, the benefit of taxes. Why do we pay taxes? Where do our taxes go to? Our taxes pay for public services, such as the fire department, law enforcement. They are very important. They have to get their money from somewhere. They are paid for by the government. Social services, Social Security for the elderly, unemployment benefits, public education. This would also include Medicaid and food stamps, different things like that. Government housing, anything like that. It also pays for building roads, maintaining public buildings, upkeep of public parks and cultural sites. So it would be like national parks, it could be the library, different things like that. It also pays for public utilities such as water and sewer. All right. Any questions about what our taxes pay for? Go ahead and give me a smiley if you're ready to move on. Fantastic. Okay, types of taxes. These are the 4 types of taxes that we pay. We pay, this is probably the one that you guys are the most familiar with. We pay taxes on our purchases. We pay sales tax. So you go and you buy something, they're going to tack on some tax. I think it's what, 6.5%. And you're going to pay that on top of whatever the cost of the item was. We also have excise tax, and that is on gas, tires, airfare, and cigarettes. Now we do have some states that do not charge sales tax. Those would be Alaska, Delaware, Montana, New Hampshire, and Oregon. They all do not charge sales tax. We also have property tax. Property tax is on real estate, boats, vehicles, and sometimes furniture. Wealth. This would be estate tax. So when somebody dies, this is the tax on their estate. That's everything that they owned when they passed away. There's also inheritance tax. So if they leave that money to somebody else, whoever inherits that money, they have to pay tax on the money that they've inherited, just like an income. But you may gift up to $12,000 a year, and that money will not be taxed. All right. We also pay taxes on our earnings. This would be income tax, Social Security tax, and Medicaid. And the U.S. began collecting taxes, income taxes, sorry, in 1913. We're going to go a little bit further into income tax. We have 2 different types of tax systems. We've got a progressive tax system, and we have a regressive tax system. The progressive tax system, that means the higher income pays the greater proportion. You're not just paying a flat percentage of your income. There's tax brackets, so the higher income that you have, the greater percentage of your income you're going to pay. Then there's regressive, and that means that everybody pays the same percentage. So if you make $100,000, you pay the same percentage as somebody who makes $10,000. So type it in the chat box, or you can take some clip art and slap it up here. What type of tax system do we use in the U.S.? Do we use a progressive tax system, or do we use a regressive? I see one answer. Kenya says progressive. Alyssa says progressive or progressive. Tyler says progressive. Brianna says progressive. She's not too sure though, but she is right. We use a progressive tax system here in the U.S. Fantastic. Takia got it also. We use a progressive tax system. We actually use tax brackets, and that's how we determine how much you will be paying in taxes. So the higher income you have, the higher percentage you will pay in your taxes. This is kind of how it breaks up. The progressive tax system is the more you earn, the more taxes you pay. Tax brackets, these are categories of income based on your gross income minus your deductions. The income ranges differ according to filing statuses, which I'm going to show you in a second. And then here are some places that also use tax brackets. Australia, Canada, and South Africa. They also use the tax bracket system. Now, even though we are primarily a progressive tax system here in the U.S., we do have a bit of regressive tax system involved. That would be FICA. Everybody pays the same percentage for Medicare and Social Security. So that would mean that that's actually considered regressive since everybody pays the same percentage. But if somebody asks you what type of tax system the U.S. uses, you say progressive because that's primarily the tax system that we use. All right, give me a smiley if you think that's all good and you don't have any questions. If you do have questions, go ahead and type them in the chat box. All right, let's move on. Here's our tax brackets and filing statuses. This is just an example. These change every year. So this is just one that I pulled off the internet. So say you make $5,000 a year and you're single, you're going to pay 10% for income tax. Okay, as soon as you pass $8,701, now your tax bracket just jumped up to 15%. And like I said, this is not really what we're using right now. This is just an example. Now, if you look, it's going to change. If you're single, you're in a different category than if you are married and filing jointly. If you're married and filing jointly, your income can go up to over $17,000 and you're still in that 10% tax bracket. Okay, now if you're married and you're filing separately, you're right back to filing the same as if you were single. And if you're at the head of the household, you can go up to $12,400 as far as this example goes. Okay, any questions about that? Give me a smiley if you're good. If you have questions, you can go ahead and type them in the chat box. Looks like everybody's good. We are going to move on. Okay, here are some terms to remember for federal income tax. The IRS is the government agency that oversees the collection of taxes. It's called the Internal Revenue Service. So when we're paying our taxes, they're getting sent to the IRS. When we file our taxes, it gets sent to the IRS. They are the ones who oversee the collection of taxes. Gross income. Your gross income, think of gross as being big. Okay, so that's going to be all sources of income. All sources of income except scholarships, disability income, welfare, inheritance, or child support. So any other type of income besides these will be in your gross income. If you have 2 jobs, your gross income includes both of those pays. All right, we have adjusted gross income, or AGI. This is going to be your gross income, this amount, minus specific deductions. Okay, there are tons of deductions. Okay, some examples would be the interest paid on a student loan, or up to $4,000 in tuition you could deduct off of your gross income. Deductions, you've got standard deductions. This is the amount subtracted from your AGI based on your filing status. Okay, your filing status was what we just saw in the tax brackets. So that's one way that you can do your deductions. The other way you can do your deductions, you can itemize them. That would mean that you kept track of everything that you can deduct from your gross income. You kept track of all year long, and then you subtract those from your gross income. But you have to make sure that you always have proof of that. Okay, and these are deductible expenses. When those deductible expenses are greater than your standard deductions, okay, you want to see which one of these is going to be greater, and you want to pick the bigger number. Okay, AMT, that's the alternative minimum tax, and that makes sure that people with high incomes pay their fair share of taxes, even though they may have a lot of deductions that could bring their adjusted gross income down into a lower tax bracket. Okay? Give me a smiley if you're good with all that. Fantastic. All right, a little bit more on filing status. Single, if you're filing as single, that means that you've never been married, divorced, or legally separated, and you have no children or dependents. Okay? Married, filing jointly, that means that a couple is married and they're combining their income on their tax return. And they may or may not have children. That's not going to make any difference. Married filing separately, that means that they're married, but they're going to file as though they're single. They're going to file their own separate returns. One return will have just, say, the wife's income, and then the other return will have just the husband's income, and they may or may not have dependents. Head of the household is going to be a single individual who maintains the house for one or more dependents or children, and they're paying more than half of their support. Okay? And then you have a qualifying widow or widower, and this is an individual whose spouse died within the past 2 years, and they're supporting at least one dependent or child. All right, looks like Kenya is typing something up there. If anybody else has questions, go ahead and type them up. Otherwise, you can give me a smiley if you're good to move on. I know Ms. Goldstein, poor thing. She just wants to answer some questions. We always love the questions. Yep. Yep, because if you're single and you have children, see this says with no dependents, so you wouldn't be filing under single, you would be filing under head of household. All right, you're welcome. All right, preparing your taxes. Let's see, you've got 3 different choices that we discussed in the lessons for how you can prepare your taxes. You know, when you're young and you don't own a whole lot, you don't have multiple incomes, you know, don't have a whole lot going on, so your tax return is going to be fairly simple. A lot of people choose to, it's the good old days, choose to do it themselves. You want to make sure that you feel comfortable doing this, so you have to have a little bit of tax knowledge. And your taxes are simple. Like I said, you're not owning a business, you don't have a house that you're having to, you know, pay, you're not paying, you know, mortgage interest or anything like that. Like I said, you have to have some degree of tax knowledge. It does take some time, and you could make mistakes, and those mistakes could cost you. So, you know, you just want to make sure that you feel comfortable with it. And most people that do file it themselves, they use a 1040 Easy. And they just kind of go through your W-4 or your W-2 is going to have, you know, box 3, and you're just going to find box 3 on the 1040 Easy, and you're just going to write that number in there. So another option, this is the one that I use, tax software. One example would be TurboTax. There's a few different ones, and yes, it is easy. And I feel like I'm very much in control of it. That's kind of why I like it, because I like to be in control. Yes, the questions. So with all the questions, it does make it easier. You can purchase the software from a store, or you can even download it or use it online. Sometimes you download the software, but like TurboTax, you can use it right there on their website. You don't even have to download it, and it saves everything on there. It guides you through the tax return. Like Ms. Goldstein said, they ask you questions, and as you answer the questions, it's just filling in the forms for you. This is another great thing. It files it electronically, so you get done doing it, you send it, and usually like within a week, you've got your tax return, and it goes directly into your checking account, so it's pretty darn awesome. I love it. You could still make mistakes, all right? So you do want to keep that in mind if you're going to use tax software. There's always the chance you could make a mistake. It could cost you money, or it could raise a red flag, and you could, you know, be chosen for an audit. Another option would be to hire a professional. If your situation is complicated, say you own a couple of businesses, things like that, then that might be a good option to hire a professional. Investments, yes, will make it much more difficult and complicated. These do cost a lot more. It costs more to hire a professional, approximately between $50 for a simple one and $2,000 for a more complicated one. I do know people who have had to pay even more than $2,000. So, you know, it could go even higher than that, the more complicated it is. But they're more up to date on their knowledge. They know more about the deductions and the credits, and a lot of times they can get more money back for a return. Or if you're somebody who ends up having to pay, they could get that amount that you owe down more. All right, so I want to know which option you guys would choose. You can either type it in the chat box. You can use A, B, or C from the polling. A for 1, B for 2, and C for 3. Or you can use the tools and put some clip art up there. All right, I see somebody put a smiley. Let me see who that is. Let me see if it'll let me do it. Usually it tells me. No, usually it tells me who that is.
It's me.
Oh, okay. That's why it's not because you're a moderator. I'm like, why isn't that telling me? All right. I see that Alyssa would use a professional. Brianna would use tax software. Kenya would use the tax software. Takia, she would use the professional. Tyler would use tax software. All right. Fantastic. Now, when I was your age, when I was fresh out of high school, I did it myself. I kind of liked it. I'm kind of a nerd, and I really like numbers. So, in fact, when I met my husband, I did his taxes for him too because I really liked it. It's fun for me. Even using the tax software, I don't tell my husband, but I enjoy it. All right, we have different ways that you can make your tax payments. Typically, we do like to make sure that we don't owe our taxes when we file our taxes on April 15th. We want to make sure that everything has already been paid, and then that way we don't have to pay a big lump sum at one time. Ways that we do this, you can use withholding, and that would be where every pay period, your employer is going to hold out a portion of your pay, and they're going to send that to the IRS. So if you get paid every other week you're going to have your taxes withheld, and that money is going to get sent to the IRS. And then at the end of the year, when you file your taxes, sometime before April 15th, when they're due, hopefully you're not going to owe any money. Sometimes you get a return. Sometimes you or a refund. If you paid too much, if you have too much withheld, then you would get a refund. The amount that is withheld is going to be based on your exemptions and your filing status, because it's basically predicting how much you're going to owe based on your what tax bracket you're going to be in. A W-2 form, that's going to be the form that you receive once a year telling you how much you paid to the IRS already. You're going to use the information on this form in order to either fill out your 1040-EZ or use in your tax software, or if you're going to go to a tax professional, you would give them that W-2 form. Now, at the end, when you do go to file your taxes, if you owe money, what you want to do is you want to adjust how much money is being withheld. You want to make sure that the next year you have more money being withheld from your paycheck so that the next year you won't owe as much. Yes, you'll usually get that form in January from your employer. I believe it has to be mailed out by a certain date, which I believe is January 30th. That's what it's supposed to be. I've had employers that don't necessarily follow the rules. And now a lot of times, a lot of the bigger companies, you can actually get your W-2 form from a website. You can just get it right there. So that's always nice in case your employer does not send it to you. Another way you can make your tax payments would be estimated payments. This would be more for somebody who is self-employed or they have a lot of investments, and then they have other income and they don't have the employer withholding their money. Maybe they have a job and the employer's withholding money out of their paycheck, but they also have a lot of income that they're going to have to pay taxes on from other sources, such as investments or another business or something like that. So they'll want to estimate how much they're going to owe at the end of the year, and then they're going to, most of the time they'll divide it by 4 and they'll pay it out quarterly and send those estimated payments to the IRS. All right, so give me a smiley if all that makes sense. All right, fantastic, moving right along. Audits. You learned about audits in Module 5. What is an audit? All tax returns are reviewed by the IRS, okay, but an audit means that they're going to do a detailed examination of your return. Okay, they're going to look at it a little bit more thoroughly. They want to see proof, different things like that. If you're chosen for an audit, you want to make sure that you have kept detailed records of all of your income and all of your deductions. You want to make sure that you have receipts, you have pay stubs, you have your W-2. You want to make sure you have all of that information. My husband owns a fishing guide service, and I have boxes and boxes and boxes of all kinds of stuff that we use for our deductions. So we have receipts, we have doctor's bills, all different kinds of things like that, and we keep those for several years in case we are chosen for an audit, because those are the things that they're going to want to look for. How many people are chosen for audits? Less than 1% of all the returns. As much as people get uptight about it, it really seems like a small number of people that are chosen for returns. But when you look at how many returns there are, that is actually a pretty good amount of people. Okay, who is chosen for an audit? The IRS doesn't tell us that. It could be random. They could just randomly choose people. Or it could be because you had unusual or large deductions. And so that put up a red flag, and the IRS now wants to see proof of that. Okay? Give me a smiley if all that makes sense. Fantastic. All right. 3 types of audits that we learned about. Correspondence audit. That's where you respond by mail. The IRS is going to contact you. They're going to say, we want to see these records, and you're going to most likely make copies of them and then mail them back to the IRS office. It could be an office audit, and this is going to mean that you have to go to a local IRS office and bring all of your things, and you're going to sit down with an agent, and you're going to go over all of the deductions, and they're going to do a very thorough examination of your tax return. A field audit is going to be where the IRS agent comes to your home business or meets you at your accountant's office. And they're going to do the same thing. They're going to want to see your proof of your deductions, and they're going to do a very detailed examination of your tax return. Okay, does that all make sense? All right, does anybody have any questions? If you have a microphone, you can pick up a mic and you can ask questions. You can type them up on the board, or you can type them in the chat box, whatever you would like to do. Just let me know. It can be from any module.